So, uh, 0-day expiration options and A plus setups. That's the subject for the night. So, I'm just going to go over what that means, and then we can go over some charts, some A plus setups, and get out of here. Okay. So, we're looking at, okay, so first of all, I mean, for people that don't know, people may be new to options. Options are a tool and instrument to get leverage in order to maximize the benefit of moves from an underlying stock. So each option is representing or gives you the right to buy 100 shares, or you're controlling 100 shares with each options contract. So without actually buying them. The benefit is you maximize your returns. The drawback is they expire and they could be worthless at that expiration time. So basically, the thing that determines the option price is as close as it is to the current price or beyond the current price, which is the strike price, and the time it takes for your option to expire. So the more time you get, the more money it costs. The less time you get, the less money it costs. So we're focused on efficiency, and efficiency is going to come from how much delta you can get, or how much return you can get with the minimal amount of movement. So Fridays are always uber leverage day, because the same move that would have got you 200% on Monday is the same move that can get you a 2,000% on Friday. So 0-day expiration, ODT or ODTE, it just means that basically it has 0 days to expiration. So this is the last day. So you're truly making a day trade in order to maximize on these gains. So so that's 0-day expiration and options. A plus setups are that are basically uh, favorable, or the highest percentage of going your way or you making a winning trade. So A plus setup may be Apple at a 52-week low, or it may be uh, if you're going short on the put side, it could be Apple at a 52-week high, or another stock that's well beyond the moving averages and the Kelt channels. And so you always want to look at, are you getting a discount, or is the price too high for you to buy? It's the same thing going into a store, or going into uh, any kind of shop or any kind of service. You're trying to get a discount. You're trying to get it below market value, as far below market value as possible. So with that being said, we're looking at a chart right now. We're looking at March 3rd. Let me expand my strikes. We're looking at March 3rd. Um, Tesla. So Tesla right now is A plus setup, and the reason why it's A plus setup, because there was a superficial reason why it sold off 12% or 6% the last time they sold off. They had an investor day, and basically they made a bad presentation, and so it doesn't change the company, doesn't change anything about what they do and who they are, or the demand for their product, but different people react to different things. And so the first thing I want everybody to notice is, look at the amount of money that it takes to buy a contract. So remember, at the beginning of on Mondays, these weeklies, they start out as being right at the money, around $700 or $800. Okay, by the time the week goes, 90% of that, 70 to 90% has been depreciated. So now we have in the money at 345 and just out of the money at 218, when, like I said, they were double, triple to start the week. So now at 200, which is extremely doable, you have a stock that you can trade for 45 cents on a call, and if it moves just $9, you're taking 45 cents, you turn it to $300. And so whenever you whenever you look at theta, theta is the amount the option decays per day, per hour, per second. It's measured in days, but time decay occurs pretty much 24/7. So you'll see at the very end of the day, these same option prices that are $3.45 in the money right now, they'll be maybe a dollar, but just out of the money with 10 minutes to go in the market, it may be maybe 5 to 10 cents. And so if you get a $2 move or a $2.50 move, which is very possible, we've seen it happen in the last five 5 to 10 minutes, then you can easily turn 5 cents per contract into a dollar, or $5 into $100 or $125. It's just that simple. So uh, basically, I just kind of want to break down what that is, why we like to trade Friday. Why Friday is a favorable setup for you, especially if you're a little bit seasoned, or you have a more of a maverick personality that wants to uh, be exposed to a certain extent to risk, with a huge or more exponential upside reward, then this is for you. Again, if this is not your what you like to do, then hey, you can be a little bit more conservative. Buy a week out, buy 2 weeks out, buy a month out, buy a year out. So I like to always let people know that options are not short term. Everybody thinks options short term. You can buy options just as far out as if you would want to hold the stock a year, 2 years, 2 months, 2 weeks, or whatever. So Tesla is the number one setup, and then we're gonna look at SPY real quick. SPY, I wouldn't consider it an A plus setup, but SPY is basically SPY is where you're able to uh, buy the market. So you can buy the market on SPY, and basically you capture the market move. So if SPY is up, that means most of the stocks in the S&P, because this is an S&P ETF, uh, is up. Is an index. So whenever you go from whenever you start the day off at a certain level, the S&P is gonna expire. The all of these options are going to expire every single day. So each day is 0 day expiration. And as you see tomorrow, we're looking at in the money. Starting off the day is going to be $1.44. About $10 out of the money is going to be 3 cent, 4 cent, 5 cents. So as the day goes by, option chain moves, and then you're able to get, like I said, more leverage on a minimal move. So that's basically the gist of it. Um, Meta is another one of our favorite setups, and is because you see a gap up and you see it sold off. Whenever you see bottoming like this, you see it's touched 160, 1, 2, and almost touched 160 today again before got some volume and ran. Uh, you'll always be able to maximize gains again, because again these start off the day as $100, $200 in the money, but by the end of the day, uh, if you can capture a move, a minimal move at that, then you can take just a few dollars. You can take a lot, you can take a little and make it a lot. So uh, we are just getting prepared for tomorrow, and yeah, you got anything else we can talk about on that note? What's that? Where at? Right. Okay. So let's say the last few days, it looks like I'm trying to manipulate and finesse my screen, but the last few days, of course, we see where, of course, the open starts out one way and then it can go another way. So again, just using Celts, what we've been using lately. Let's take the day for in. I'm sorry, it's not the day. I'm trying to get. Okay. Okay, so I'm thinking I'm looking at the market, but I think I'm looking at spot I wasn't. So again, looking at when if it ever goes, uh, of course the Celts, if they can go below, then even if you see pre-market 185, so you go below the Celt at 185, and then we run 193. So uh, what's one of the things that I've seen, you can almost be guaranteed a move if you can buy below the Celts and then just wait. So the last time we went below this lower Celt 198, and then we got a $4 move. So that's still going to be good for maybe 100% when it comes to options. Um, on the hourly, okay, on the hourly, when you're looking at the Celts, we have um, we just seeing where and when it goes below. So we're seeing right here on 213, right before Valentine's Day, 188 again, 188, and by the end of the next day, we were at 210. So that's a that's a 20 that's a 24-point move, and within a matter of just hours. So again, the same thing on the short side. Whenever we get the upper Celt, or we retest. So especially this is a plus setup because the upper Celt got rejected twice in double tops. And so once we get a lower move, 217 turned into 202 in one day. So of course that's 15 points. So we know how Tesla can get 15 points from 190 to 205. So you're basically turning $16 into $345 just in that one day. So that's why we're able to. That's why we have stocks that we watch, because a lot of times they'll follow the same patterns, and if you can study them and get a grasp on how they move, then you can capitalize. So right now on Tesla, I see for today the pattern that it looks like it's setting up is um, is possibly from today from 213 into all the way into I'm sorry, 213 into Valentine's Day into 214. So we saw a very brief touch at 190, and then we went to 209. So that's a 20 point move. So we could possibly get something like that. Crypto is crashing, so we did take note of that. But again, like I said, from 190, and then if we can pull down to this lower Celt again and possibly double bottom,